Good day, students. We're just doing part 2 of the MCQ test, following on from questions 10 to 20. The first question is, which of the following are included in current assets? We've got equipment, inventory, accounts payable, and cash. Included in current assets, remember, equipment is used for a long period of time. So the only ones that should be included in current assets should be inventory and cash. 92% of the students got it correctly. Remember, for the respondents that got the question wrong and included accounts payable is a liability, a current liability, and not an asset. It's the amount that you owe people. It's payable to others. Okay, questions 11. XYZ Limited is budgeting for the next year's sales of its two products. Okay, there's product A. It expects to sell 2,340 units for 110 each. So there we can just estimate the number of sales that are taking place. We just take the units times the price. And then for product B, it says they're expected to be up on last year's figure of 267,000. The percentage increase should be around 40%. What will be the total budgeted revenue? If you look at my answer here on the left, the units for the A were 2340 multiplied by 100. So you expect to have a budgeted turnover for product A of 257,400. It's just multiplying the units times the price. For product B, you expect it to increase by 40%. So all I've done is taken the 267 from the prior year, multiplied it by 1.4. 40% is the increased. I get to sales of 373,800. I add the 373,800 to the 257,400. I get to a total turnover that I'm expecting of 631,200. 81% of the candidates managed to get this correct. Okay, if we're moving right along, the MCQ was given with a balance sheet item download, and it asked you to calculate what the total current liabilities amount to. Okay, so if I just were to download the total liabilities, I go through the full list of total liabilities. Okay, they want only the current liabilities. Remember, deferred tax is a difference between SARS balance and accounting balance, but that's only happening over a long period of time. It's not going to be settled within the next 12 months. So deferred tax liability is a non-current liability. This is equity. Long-term loans are non-current. Prepayment is an asset. NCI is equity. Pref shares equity. Reserves equity. Trade receivables is an asset. Bank overdraft and tax payable are both current liabilities. Non-current assets, of course, are not included there in your current liabilities, and goodwill is an asset. So if I add up all these blue, okay, I add up the 900 other and trade payables and the 3,000. I add up the bank overdraft and the tax payable. I get to 7,919 respondents got that correct. Okay, so the correct answer is 7,900, and only 40% of the candidates got this answer correct. If you look here on the left, I've highlighted in blue which met the definition of a current liability. Okay, if we go to questions 13, it's also an MCQ balance sheet item download, and they want you to calculate what the total equity is. Okay, so if I were to download the same list that you guys were asked to download, and I go through the exact same list, but now I need to highlight the equity items, which is ordinary shares, non-controlling interest, pref shares, and reserves. If I add up all these two together, I get to 11,000. 17% of the respondents got this correct, 35%. Remember, your pref shares also form part of your shares, which add up to your ordinary shares. This makes up part of your equity balance. Any reserves are also included as part of your equity balance. And then lastly, you've got this non-controlling interest, which is the portion of equity that is not due to you, given the percentage that you hold, you might hold 80% in another company. The other 20% is equity that's attributable to other people. So your non-controlling interest also forms part of the equity balance, which totals 11,000. Okay. Next question. What does the total assets amount to? So they're not looking here for the current asset or non-current asset split. They want the total assets. So we now need to group up the total asset figures. If I were to look through this account and just highlight all the assets relating to this company, deferred tax asset, that's self-explanatory. It says asset. Prepayment to suppliers. Remember, when you make a prepayment, it's an asset that you can use up in the next year because you've prepaid something early. You still got the benefit to use the following year. Trade receivables, people that owe you money, that's an asset to your account. Non-current assets and goodwill also meet the definition of assets. If I were to add up all these counts together, the total balance is 23,900. So the correct answer is 23,900. 29 respondents got this correct, which is 60% of the students within weekday B class. Okay, then moving right along, it says, given the following information, what would be the value of cost of sales? Okay, so for cost of sales, remember we calculate, they've given us sales and two other expenses here of telephone and marketing. What we need for a cost of sales calculation is your opening stock, you need the stock purchases, and you need the closing stock. Remember, consumables purchase should not be forming part of this. It's only your stock purchases because you're looking at your inventory account and what's moved from your inventory account into your cost of sales account. Okay, so for that question, let's go back to our answer sheet here. We're now on question 15. Your opening stock was 3,000. Your stock purchases were 20. And your closing stock was 5. You add those up all together, but remembering to subtract your closing stock, you get to a balance of 18,000 for cost of sales. 30 respondents got this correct, 63% of the candidates, which is the correct answer, which is 18,000. Remember, you should not have added this consumables purchase. We only wanted the stock purchases as these form part of your inventory. Okay. Moving on to question 16. Profit retained in the business always results in increased shareholders' equity, share capital, debtors, cash, or no answer. Of course, your retained earnings, any profits go into retained earnings, and retained earnings forms part of your equity balance, which is your shareholders' equity. Remember, share capital is the number of shares that you're holding. It's got nothing to do with the actual equity, shareholders' equity balance, but this also forms part of shareholders' equity. But your retained earnings also forms part of this balance. 85% of the candidates got this correct. Okay, the people that got debtors and cash wrong, completely wrong. Profit increases your shareholders' equity. It has nothing to do with your debtors and your cash balance. Okay. The next question, the stock was expected to rise in direct proportion to the cost of sales. Then calculate what the stock is for year 2. So they've given you the cost of sales in year 1 and the increase. So if we were to do question 17, I actually look at the cost of sales. It moved from 189,600 to 204,205. The increase, you actually just take this one divided by the old one minus 1. Or what you can do is, and another way of doing a percentage increase is just take the difference between the two. So that minus that one and divide it by the old balance. Okay, you'll get to the exact same percentage using the other formula. Okay, and then all you need to do is make sure you're increasing the stock by the same amount. So I calculate the previous year's stock 1 plus what my actual percentage is, which is the same as the cost of sales percentage. I get to a balance of 83766. 83766, 79% of the candidates got this correct. All you're doing is taking that same percentage with your previous balance and trying to increase it by that previous balance, and you get to that figure. Okay, moving on to question 18. Question 18, it says an increase in the company's gearing will bring about a corresponding ROE. So if you remember when we actually went through the ratios, I said to you guys that remember ROE is made up of three components, your return on equity. It's made up also of your net profit margin, which is a profitability calculation. You multiply that by your total asset activity ratio. So how has your activity done in terms of your total assets divided by your sales figure? And then what you needed to do is look at what is called an equity multiplier, which tells you what the gearing in the company is. Increased gearing should bring about an increased return on equity because you're multiplying the net profit margin and you're multiplying the asset efficiency, all those three components. Okay, so your return on equity, if you've got increased gearing, we want a corresponding increase in your return on equity balance. Okay, 40% of this of the candidates got this correct. Remember, a company's corresponding increase in financial distress. Just because you've increased your gearing doesn't necessarily mean you've already entered financial distress. A company could have had the zero debt balance and they could increase their gearing. That does not mean that they already have entered into a financial distress situation. All it means is that they've increased their gearing for that year. Okay, so financial distress is a very different component. We need to give you more information to say that the company is now in financial distress. Okay, looking at the next question. If 20,000 new 1 Rand shares were issued at a premium of 170, what is the total the company would receive? Okay, so your share capital is 1 Rand of the 20,000 shares, but now you've also issued a share premium of 1 Rand 70 times that 20,000. All you do is multiply the share capital by the number of shares, the 1 Rand that you've issued it at, and you do the same for the share premium with the 1 Rand 70, and you get to a total figure of 54,000. Okay, 15% of the candidates got this right. A lot of the candidates got this wrong. What the candidates incorrectly did was calculate only the share premium portion. So we see 65% of the candidates thought it was 34,000. But remember, you initially also issued the shares at 1 Rand and you got an additional premium. A premium is over the initial share capital that you issued. So you've got the share capital of 1 Rand and you've got the share premium of 1 Rand 70. You needed to add the initial 20,000 to get to the 54,000. Fortunately, only 15% of the candidates got this correctly. For those that were calculated 34,000, you've only calculated the share premium and not the share capital and premium that you're getting together. Okay, that's question 19. We're on to the last question. The last question, question 20. If debtors on the balance sheet amount to 14,320 and this has grown to 28,550. Remember, when we're looking at your cash flow statement under operating activities, you've got your movements in your working capital. Your movement in your working capital, the minute your debtors balance goes up, we are funding the debtors. We are using up money in our business to actually give away some of our inventory, and they're only going to pay us at a later stage. It's not an inflow. Okay, there's an outflow that's happening in your business. You're giving them inventory, you're allowing them to take stock in your business. It's an outflow, you're funding them. So you definitely needed to get an outflow. The question is, which one is it? So it could have been either an outflow of 14,320 or 14,230. So we need to look carefully at those two numbers, which one is correct. And if we were to look at it correctly, we take the balance of 28,850 less the 14,320. I make sure my numbers are correct, and I just subtract the two. I get to an outflow of 14,230. The outflow needs to be 14,230. Okay, so the candidates that got it wrong here, it's just you needed to look at the sum of your amount. Your amount is incorrect. It isn't 14,320, it's 14,230. You just needed to make sure you've actually got to the correct answer. 46% of the candidates got it right. For the people that have got an inflow, it's not correct. It is an outflow whenever your accounts receivable balance or your debtors balance is going up. Okay, that concludes the MCQ review. Let me know if you have any questions. I will be also answering questions via email. Thank you very much, students.